Rudy Bohlis, you are attacking Credit Suisse and you want to do this in English. Why?
Well, first of all, I think we're not attacking them. I think we bring a plan for discussion. And secondly, I think most of the stakeholders are non-Swiss as far as the employees and the shareholders are concerned. So I think English is appropriate.
Okay, let's try in English and let's hope that people will understand you, because I think not everybody, especially in Switzerland, is understanding you. This is a headline news in Blick. Yesterday, you are a raider. Are you?
No, I think we're not a raider, right? I think what is correct is we are a small shareholder, but I think we have a very interesting plan which we will bring forward for discussion, and I think that's what we should focus on.
So, let's for a moment stick to this word raider. Why are you not seeing yourself as a raider? You are attacking, or you wanting to split Credit Suisse into three parts with only 0.2% of the capital. So this is typically a raider attitude.
No, again, I think, first of all, I think the focus is too much a little bit on our person, which I think is not merited given our small stake. I think the plan should be in the center, right? And in the end, it's the shareholders who decide, it's the management and the board, and we feel the plan is strong enough that it's going to withhold this discussion.
Okay, the plan. What is your plan?
So, first of all, I think one should observe that conglomerates achieve a relatively low return on equity, right? Even the best-in-class conglomerates, they peak at 10 or 11%. Whereas if you have specialized, focused financial companies, they have return on equities of 15 to 20% or above, right? So I think it's much more desirable to be specialized with higher growth opportunities and a higher return.
To be with you, specialized in Credit Suisse means what?
So we believe the core is the international wealth management, which has its strong roots here in Switzerland.
That's the core. You want to build a new Schweizerische Kreditanstalt, like it used to be 20, 30 years ago, and then you want to split the rest of it.
So I think what's important is to take the strong heritage, the brand, the employees, and enrich it with modern day technology. Right? I think that is the big issue. That these large conglomerates as well, they depend largely on legacy technology, and that needs to be changed.
So, okay, you want to build a new Credit Suisse, Switzerland with global wealth management, and then the rest investment banking and asset management. So you want to split Credit Suisse into three.
Yes, that is correct, right? And I think it's actually I think it's very straightforward, right? The most important piece there is that there are very little synergies between investment banking and the private banking side, right? When we look at the private banking side, I think the elements that you can argue that you need from the investment banking side is certain M&A capabilities, right? For the ultra high net worth, and some structured finance capabilities, right? But I think that's a very small part of the investment bank, and that should be integrated within wealth management and not separate in a large investment bank, right? Okay. There's over 20,000 people in the investment bank, and most of them, they work in New York and in London, whereas for private banking, wealth management, we are talking about Zurich.
Okay, so a smaller thing, and what you need from investment banking, you can put it into that new entity, Swiss entity. What about the rest?
And I think, and by the way, I think it's already here, right? I think there is a lot of the capabilities that are needed in terms of investment banking. They are already here, present in Zurich.
Okay, what about the rest? What about the big machine, the big investment banking machine? We're talking about thousands of jobs, mainly in London, mainly in New York. You throw it away, or is there any value in it?
No, I think there is a lot of value in it, right? But I think it needs to be focused a bit more, and it needs to be probably a bit more streamlined, right? I think there are two big elements, right? One is the advisory side, right? That uses relatively little capital. I think that's something that the capital markets also likes a lot. That would be a very valuable standalone, right? And then you have the second part, which is the global markets part. And I think that's a little bit more problematic. But a lot of homework has been already done, right? One has reduced the balance sheet. A lot of the legacy issues, they have been sold at a very high cost, one has to say. And now I think it's really time to focus this on the very profitable niches, right? I think the days where you can say we need to offer everything to everybody are over if you cannot earn a cost of capital. And I think that's the focus. You have to earn sustainable in the long run the cost of capital, not in 1 or 2 quarters. And this has to take into consideration that now and then you're going to make huge trading losses because it's a very risky business, right?
Okay, so how much would you reduce it? This investment bank, this new investment bank that you would split apart, how much?
So we believe you have to reduce it at least by 50%.
So it comes down to 5,000 people.
I think that's still a very large trading organization, yes.
But it would be more or less there.
Yes.
Okay, and there will be a separate entity quoted, so listed at the stock exchange?
So I think our idea is, I think you need to have at least a single A rating to list it in, we believe New York would be the logical destination for that, right? It's the financial capital of the world. They do the biggest transaction there. Also, First Boston originally comes from the Wall Street. I think
that would be the name.
We would propose to go back to this original name. I think it's still a very strong franchise, right? And we believe also it's a win-win situation for the employees of the firm, right? I think they would have back their own identity and focus it on investment banking, which you can do very successfully, which other people prove, right?
But it would be the end of Credit Suisse Group. There would be no longer a group. It would just you would bring back Schweizerische Kreditanstalt somehow. This is private banking and retail bank, core Switzerland, and the rest has gone. So the big Credit Suisse Group, still big, although there was some reduction, would be taken apart.
Yeah, that's correct, right? But I think one has to also look at what can be successful nowadays. And if we look at the banking industries, it's one of the last industries where you basically still have dinosaurs, right? Where you have these large conglomerates, right? In many of the other industries, companies have specialized a lot more on they're either very strong on the marketing side or on the R&D side or both, right? And the banks today, they still try to be everything for everybody, right? If you look at Credit Suisse, they are serving the pension fund on one hand, let's say through their asset management unit. They are serving the aggressive M&A client with the investment bank, and they serve the wealth management. So it's completely different customer groups trying to sell everybody or everything to everybody, right? And I think nowadays it just doesn't work anymore, and you see it with the returns. They have subpar returns, and all the conglomerates have subpar returns compared to the specialists.
I have understood this thought, but all the big competitors of Credit Suisse still stick together. Let's take Goldman Sachs. They became, from an investment bank, they became somehow a retail bank, a universal bank. Bank of America, big thing with Merrill Lynch that they have bought in the crisis. JP Morgan, they have everything. The big French banks, they do better than the Swiss ones. They are also a conglomerate. So why do you really think that would be the good choice for Credit Suisse and its shareholders?
No, I think Goldman Sachs is a very good example, right? Goldman Sachs today achieves a return on equity of 10%. It's always been perceived as best in class, right? When you look at their M&A division, they're mostly number one, right? So the M&A, that's the business where they have a very high return on equity because it uses very little capital. But in aggregate, Goldman Sachs now has a return on equity of 10%. They cannot go any higher, right? Because the large trading operations at Goldman Sachs as well, that used to make a lot of money in the past, are not these money-making machines, because times have changed, right? And you cannot turn back the clock
so
there.
You would also split off.
So if best in class is 10%, right? I think for Credit Suisse to say we can beat Goldman Sachs, I think they've never done that in the past. So you see what you can realistically achieve is a return substantially below 10%. Now, if the Credit Suisse shareholders say, look, we are happy with that, and your ideas are completely crazy, then that's fine, right? In my opinion, I think you cannot be happy with that, and I think it's very straightforward to actually go now along this path, right? I think management has done a great job now restructuring the group, reducing the balance sheet on the investment banking side, and so kind of preparing it for a potential IPO. And I think they've looked at these things in the past and it was not doable. I think now it's doable.
Okay, now is the time. Okay, but that's somehow contradictory, because somehow you say Credit Suisse share is a mess. On the other hand, you say that the management that is responsible for the share price is good. So I mean that doesn't fit together.
Well, so I think new management they started 2.5 years ago, right? So I think it takes a little bit of time to turn around the super tanker, right? So I think they should be given that time, and I think the communication they've come to the public with so far is also very consistent, right? They are in a 3-year plan, right? But this 3-year plan that comes to an end, right? And what comes after the 3-year plan, right? And we believe that that our discussion proposal is just a logical succession, is the way forward. We believe it's the best option.
Because you think management, Mr. Thiam and his top managers, they have done something of your plan. Do you see some first steps into that direction? They divided Credit Suisse Group into Asia, International and Swiss Bank, and at the side 2 investment banking divisions. So you think now you can continue on this path? Because if you look at this plan, I mean it's like neither fish nor bird, as we say in German.
Well, I think there has been a lot of cleanup, and I think that's been essential. And now is the time to look forward for the next 5-10 years. How can you really be successful, right? And I think that the most important thing, also from a Swiss perspective, is to understand is like the risks in investment banking. As long as you keep them with wealth management, the Swiss taxpayer will always ultimately be the backstop if something happens, right? And it is a different culture, right? There's no positives or negatives about it, but you have like the Swiss culture in private banking. I think it's a lot more conservative, and I think that's what most of the private banking and wealth management customers are looking for. And then you have the investment banking culture, which is the risk-taking culture, right?
That doesn't fit together. Okay. So you think the management can stay? That's important, no? You would realize your plan with the actual management.
Look, I mean, it's not for us to decide this, right? Obviously, I think people have noted we have 0.2% of the company. So, but I think they are perfectly suited to do the job, of course.
You don't shoot against them. You say the group must change, the structure must change. There have been other like intents into that direction. An English investor, Knight Winke, tried to do this with UBS, but no chance. Why do you think that there is a possibility that you will succeed?
Look, in the end, it's timing. I think is very important, right? I don't want to judge on the timing of Knight Winke on UBS, right? But I feel that the timing for Credit Suisse is very right.
Do you feel that from the investor side too? I mean, you said we start now. We are talking to 100 investors, potential shareholders in Credit Suisse. Where are they?
Yeah, I hope they're gonna show up in the shareholder registry. So no, it's correct, right? So we had over actually I think it's over 150, but we don't keep count of every single one of these private discussions, and I think the overwhelming part I think agrees with our analysis, right? And then it's of course a question of the implementation, right? Implementation is always is critical, right? On one hand, you can analyze things, right? That's fine, and people agree with the analysis, and then the other side is the implementation, and if the board, the other shareholders, and the management agree, right? And I think that's why we took this discussion public, right? Because we said, that's maybe not something that should only be dealt with behind closed doors, but it's obviously a very big decision for the group as well, and I think it merits a public discussion here.
It's a big plan, and we see the media, how it reacts, and there is a lot of talk. So, we take it seriously, of course, although most of the people say no chance. How much chance would you give yourself for your plan?
I think there is a very high chance. Right?
What does it mean, very high?
I think something is going to happen for sure, right?
Yeah, but 80% or
100% something is going to happen.
Yeah, okay, always something happens, but I mean, what is the chance that your plan will be successful?
Yeah, we're working on it, right?
But what is the chance in percent?
Well, the more we work and the longer it goes, the higher the chance is going to be.
Are you just a frontman of some hidden big investor? Let's say for Harris Associates, the US investor that has like between 5 to 10% of Credit Suisse shares?
No.
Are you acting on your own, together with the guy de Boissard, his former Credit Suisse manager?
So maybe there, just to clarify one thing, I think we had a few discussions with Mr. de Boissard, and I think he was quoted in the FT, but there is no formal engagement or anything. Right?
So he's not your partner?
Well, I think we had very good discussions, but we don't have, like, let's say, a contract or anything, right? Or he's not employed. It's like, I think what he said is like, if he's needed to help, I think he's happy to do so, and I think he also said that the plan has merit, right? So in that sense, I find it, wrong to now discredit the man who I think who has done a lot for Credit Suisse, who's been working there for over 20 years, who was a candidate for CEO, and now with this whole smear campaign. I think that's really disgusting.
You're talking about the girl within Credit Suisse, and the question whether she gave some information to Mr. de Boissard.
Okay, look, what I can categorically deny is like that we received any information, right? All the information that we have is public information. It's information that we already shared with Credit Suisse, right? And we made our own assumptions and analysis, right? And I think all the rest is just fabricated news.
But then you're alone. You're not even with Mr. de Boissard. I thought at least two.
No.
Now you're alone.
No, I don't think we're alone. I think that it's a healthy discussion, right? It's not about us against them or so. I think it's about the plan, and I hope people start to talk a bit more about the plan and what the trajectory of the group should be going forward than about us. I think we are not that much of an interest, right? It's like,
okay, your plan. But on the other hand, you had several plans before. You were in discussion with Gate Group, which is an airline caterer. You were in discussion with GAM, which is an asset manager, and both times you bought a small amount of shares, you attacked the company, mainly the big management, and then you sold your shares. So will you do the same with Credit Suisse?
So, look, I think, as I said, if the shareholders and the management and the board, by a vast majority, come to the conclusion that our plans have no merit and they want to go a different path, I think that then there is no point in sticking around and playing crybaby, right? And I think the same thing we did at GAM, right? I think the largest shareholder clearly said, look, this is what we want. And I think we had a vote at the AGM, and I think that's fair enough, right? That the largest shareholder there decides, and I think here is the same thing. In the end, the majority shall decide, and then you accept that, right?
What are you? A gambler, a raider, or a long-term investor?
Look, I think none of the above, right? I think I don't like to all these boxes, right? It's like I look at the opportunities. And obviously, Credit Suisse is an iconic firm. It's something I'm very passionate about. It, the history also, you know how over 150 years. It's been here, I think, since Switzerland had the new constitution and everything. So it's a big project, right?
Do you bank with Credit Suisse?
Currently not.